Welcome to Caching Waves. This is an Elliott Wave update for Bitcoin. Now this video is going to go quite in depth. Just so you know, we're going to go over the bullish and bearish scenarios, as well as look at some other things like the CME gap. Now hopefully if you watched my video yesterday, you were able to escape almost unscathed in this area. I wasn't even in a position here, so I was able to avoid it altogether. I suggested a couple different things. The way I was trading this was waiting for a micro 5-wave move off the low area we were projecting yesterday as a wave 2, and we didn't get that, so I was able to avoid this whole entry. If you did take this entry, there's nothing wrong with losing a trade as long as you kept your risk to a minimum. And if you ignored both those situations, perhaps you had a learning experience and some evidence to show you why money management or letting the market come to you is an important thing. Okay, but I hope all of you avoided unscathed or maybe a 1% loss. But anyways, we're going to get into the charts here, talk about the bullish situation and the bearish situation. Okay, if you watch my video, I haven't talked about this in a while, but it was like a month ago. We talked about how we were looking to come back in the previous fourth wave of one lesser degree, and how we could have held here, but if we came back to this area between the 236 and the 50, nothing wrong with that being a fourth wave as well. So we're still right in that zone. A couple of things are getting a little bit concerning, but I'm not a bear yet, but my targets have been adjusted. A few things have been adjusted. We also talked about in previous videos the length of wave 2 wanting equality with the length of wave 4. And the 1-to-1 in time, which was on here for quite a while before, was August 10th. So you can see we're right around the corner. So the question is, do we hold in this area between the high probability zone for a fourth wave, the 236 and the 382? Obviously we want to hold above the 50. That's kind of our last resort. But I kind of wish we had ticked through this fourth wave. Maybe we did on some other exchanges. I'm not sure, but I've just been using this one. And if I put a line across, did we tick it? No, we came up shy by like literally dollars. Not that that's a big deal. I just really would have liked to come into this fourth wave of one lesser degree, but we are getting quite a recovery with a lot of volume coming in. So we'll see how this area holds. Okay, one thing that has changed in this bullish scenario. We can still get that extended fifth we talked about in previous videos, but the 1-to-1 extension, if this area holds, and funny enough on Binance, it held at exactly $49,000. Right to the dollar. I've never seen that before. But if this 49,000 holds, we extend the length of wave 1 off of wave 4. That target is now 98,151. So target has changed slightly. Now we've talked about these pitchforks as well in the past. We want to hold within the original. It shows us we're quite bullish. Modified pitchfork, we usually look for a fourth wave on the top end of it. So we wanted to hold this area. But the last resort, not last resort, but the last high probability zone is on modified pitchfork is the center channel. So if the top end fails, you really want the center channel to hold. So we're on the tail end of possibilities for a fourth wave. Now I'm just going to give you my most probable scenarios, and if we're in the bull market, this is that scenario. Obviously, we've talked about this before, because we haven't hit the 1.618 extension. We can get a extended fifth if we come up to our target, and this would be a 1-2 within a fifth. That's the extreme bullish scenario, but just wanted to let you know that's available. But until we get there, it's not worth talking about significantly. But you can see as long as we hold this zone, we're in the high probability area for our fourth wave. We're at basically the 1-to-1 in time of wave 2 for wave 4. And everything seems to be okay. We're at that center trend line. So we're still possibly bullish here. So no need to get very concerned yet. But I'm hyper aware of the bearish scenario, which can get pretty ugly. So I'm going to talk about that, and then I'll get into the smaller time frames, what I think the count is currently there. So the bearish scenario, this would be my primary bearish scenario, which is quite ugly. And that is that this was a WXY from the low, ABCX, ABC. You can see the equality is actually quite nice. I believe a lot of them were 1-to-1s if you label it this way, 1-to-1. Just shy of 1-to-1, but you can see the equality in this one looks pretty good. And the area we look for a flat pattern, so I have this as an A wave, 3 waves for our B, is the 90% is our minimum requirement to the 105 for a regular flat, a running or expanded flat up between the 1.236 and the 382. So you can see we're in that zone. We've made a higher high. So we have the ability to make a running flat. In this scenario, we'd be looking for 5 waves down for a C wave. Now I took the length of this A wave, extended it in time off this high, and if we were to make a 1-to-1 in time, we would make this C wave between March 26th and November 11th-ish. That's the 100%, the 1-to-1 in time, and the 1.618. Sometimes it takes longer. Now these are just guidelines, not rules, but I at least like to line it up so I can kind of see where price is at that time. Okay, in this scenario, we're looking for 5 waves down. And I've had to relabel this, go down to the 4-hour, and this scenario does work. So in this scenario, this ends up being a diagonal from the high. I see this as a flat in all my scenarios pretty much, as an ABC 335. This just looks like a perfect 5, so I'm not changing this. I wouldn't make this a 1-2 either. It's goes against too many guidelines in my point of view. So I'd have this as a diagonal. We have a running flat, and I'd be looking for 1 more wave down to be completing our 1-2, 1-2. And you can see after this ABC of this 1-2 how fast we would probably sell off here, because it would be a third wave, right? So very ugly potential. Hyper aware of this, obviously, and it's going to be very important to track this area. If we get this one more move to the downside and this ABC, we'll be looking for 1-to-1s, and the way I will trade this I will show you in the future. But if we happen to get this pattern, basically I'd be waiting for it to pan out. Comes up here, I'd put my short, I'd trigger enter it below that B wave if this was an ABC, and I would be triggered short right here, stop at the C, and I'd be riding it all for these 5 waves down. But until that happens, I have to keep the bearish scenario in mind, because we're still in an uptrend, right? We haven't broken any significant areas. This is the significant support area right here. So we have to wait and see. So that's my bearish scenario. Targeting will be difficult moving forward. We'll have to use fib pulls for all these scenarios, but basically on log scale, the 1-to-1 of this A wave for the C is at 16,547, and on linear it's basically 20,250. But the minimum requirement is just the 618, which is at 29,290 and 40,699. So quite a wide range. This is where we use our fib poles once we get these waves panning out to get a better zoned in area. But as long as we know the direction is down, if we get this 1 2 1 2, then we short, right? And we let the waves expose themselves and we track them the best we can. Okay, so which one are we going to get? It's going to be quite interesting. Now let's talk about this. This was quite interesting. So we got a CME gap here and a CME gap here. Literally, we still have that gap, but now it's to the upside to close. Very interesting. So that gap is 62,470 to 59,445. So are we going to fill this gap? That's very interesting. I just want to check something here. I want to check where the 618 is here. Come on. Bear with me. $618. Where are you? There you are. So 618 does not fill the gap. It does on linear. So we just got to keep that in mind because I'm going to put this on the other chart. So on linear, 62,625 fills the CME gap on linear. On log, it does not. Okay, so we're going to come to this 4 hour on where I'm tracking. And let's talk about the current correction. So we talked about this yesterday. We were looking for a 3, 3, 3 like this. But instead we sold off pretty significantly. I went over this over and over today. I can still only get a 3-wave move as an ABC. So that means one of two things. It means we had a very short Y wave. Goes against guidelines, but no rules are broken, right? If this was just a capitulation event, I would be fine with this being a Y wave as long as we recover quickly. Now, there is still an alternative that we still make one more move to the downside, and this is still counted as a correction. So you can see I have this as a 3, 3, 3 currently as a WXY, but this also qualifies as a flat, as an A, B, and if we go with this gray scenario, we can get a 1, 2, we're at a 3, we can get our 4, and another tick down for a 5, and all this makes is an ABC. And in that scenario, we come down to that fourth wave of one lesser degree I wanted to see. But then we're looking pretty weak. We'd have to have a very fast recovery after that. So I'm still open to that possibility. Just wanted to show you that. Where areas would flip there. I'm just doing this shortly. Oh, actually I have it on another chart. But want to see recovery here or one more low in 5 waves for a C wave. Both are valid, right? WXY or ABC. That's why in so many videos I always say it can be a WXY or an ABC, and all that difference is one wave, right? 5 waves or 3. Okay, so let's go to the zones I was talking about. Okay, go down to the 1 hourly. Where is that? This is what I want. Okay. So, where do we not make this 5th wave anymore? Right? So, this is an ABC or a 1, 2, 3. So, we take the retracement from our 3rd wave, put that on, and this is my probability shift. So as you know, a 4th wave Usually becomes between the 236 and the 382, which we've already come through the 382. Probability shift past the 50, I wouldn't count it a fourth wave after the 618. So these are two different fib pulls. So past 58, 714, I'd get rid of the idea that this is a fourth wave. Unless we make some sort of triangle, because the first A wave can come pretty high. But we would at the end get our actual fib pull at the end of the correction, right? But that's why it's important to see how the waves fill out here. Do we get a 5? Do we get a 3? Right? So where do I get bullish again? From the entire pull of this labeled as an ABC, we would get that past the 618 of that zone. And go between log and linear to get the highest price. This one's 62.27. Where was that CME gap? 62.227. Yeah, prices are slightly different, as you can see. I'll be watching the CME gap though. I'd like to see that closed. But what's interesting is that does leave the open possibility that we could come up here and then pivot back down, right? But that's a whole different correction. No point talking about that at the moment. Trying to keep things simple. So basically, we're looking for a break of this fourth wave, a probability shift zone at 57,329. Yeah, we'll go with linear on that. It's the further price away. And probability shifts that we're moving to the upside past 62,027. And it's important to note, we want to hold, obviously, above this low in the WXY scenario at 49,000. So going to be paying very close attention to how this wave pans out. I'm not interested in a position at the moment. I want to see if this turns into some sort of 5-wave move in two different ways. Do we recover quickly? Maybe this becomes a 1, 2, 3, 4, 5, 4, 5, something like that, and we get our 5-wave move. I would be interested in a long over here. Or do we make some sort of diagonal? Can do that as well, in which case I will play this much differently, because as you know, if you watch my videos, diagonals can also be WXYs. They mimic each other. So it can be corrective. It can also be bullish. I have strategies for both of how I actually trade that. So as of right now, I'm sidelined until I get a clean count on this. I would like to see a quick recovery, like a V bottom here, and we recover this very quickly, and we can start the trend. But we'll have to wait and see which one we get. There is other good news, and that's we've been tracking the DXY as well, and the dollar went down, so it's kind of strange, a little bit odd that we are selling off rate like this unless we're about to recover because the DXY is going down, right? So we'll see. Very interesting spot though, very interesting. So to wrap it up, we want to hold this level or make one more low and recover quickly as an ABC. If we are bearish, we're expecting that one more move to the downside for a 1-2 and lower prices after that. Now I'm going to do a bunch of updates because there are some altcoins that didn't make new lows, and those are the ones I think that will outperform if this is bullish, right? Because they'd be most likely on third waves where a lot of other altcoins made new lows. So we'll discuss those. One of those is ICP, one of those is XRP. That held, did not make new lows, which is pretty impressive considering how hard Bitcoin fell. Pretty impressive. All right, guys, that's it for Bitcoin. If you have any questions, let me know, and I'll see you on the next one.